My mortgage went from being $1,500 to over $4,200.
Like, I didn't know that when I was building a home that I was just gonna have to pay taxes off the land.
My new mortgage will be $5,337.65.
So today we're going to be taking a look at some insane mortgage increases people have been getting recently. We've gone over the renting market before and it's almost yearly increases. So people see that owning a home with a fixed rate mortgage could be the better way to go. But now housing prices are way up along with interest rates, and many people don't add in the cost of upkeep to maintain the home if anything breaks. So of course that makes things more expensive. But now we're seeing a wave of further increases with insurance, escrow, and taxes. So that already pretty expensive monthly mortgage that people were stretching their budget for has now just gotten completely out of hand. So we're going to be going over some clips along with some comments from you guys with your experiences from previous videos. So if you want to be featured on a future video, leave it in the comments down below. But we're going to start off with a clip that I honestly don't know what I'd do if I was in this woman's shoes.
Y'all, so I just got my yearly escrow review, right? I own my house and I pay for mortgage. My monthly mortgage is $3,332.74. That's how much I pay to live here, okay? Remember, the people, they tell me I live in the ghetto. I act like I live in Beverly Hills, but I live in the ghetto. But in order to live in this ghetto house, I pay $3,332.74. Well, guess what? Your girl just got her yearly escrow. So, boom. They say, by the way, Mr. Cooper is my loan folks. Mr. Cooper wrote me a letter and they said, hey, girl, you have a shortage in your escrow of $12,426.11. Wow, okay. How did that happen? Well, several things probably happened. Probably taxes went up, but remember, y'all told me I live in the ghetto, so they say probably taxes went up, maybe your homeowner's insurance or something went up. Okay, guess what? They're telling me my new mortgage will be as of March 1st. Okay, so my new mortgage will be, are you ready? $5,337.65.
This woman's having like a breakdown in the middle of a TikTok video, but I understand why. We can look at some of the comments first. This is why I don't want to own a home. And even the creator said home ownership isn't for everyone. How do you even come up with an extra $2,000 a month? I would literally have to sell. There would be no way. So I have several different examples in this video of why prices are starting to increase. Homeowners insurance going up, taxes in general, property taxes. Like a comment from one of you guys, having a mortgage isn't fun either. Property taxes went up $1,000 in 1 year, and I have about $20,000 in maintenance we have to do. But from what I'm starting to see in some of these videos is that people don't know what escrow is, and out of nowhere getting charged way more money than they thought, even with a fixed rate mortgage.
So I think something that people are not talking about enough when it comes to this housing crisis that's going on right now is escrow. So, you know, home prices are high, interest rates are high, we know that. But what about escrow? Because this is a huge chunk of our mortgage payments. And I think so many people are not entirely aware of what can happen with that, especially if they're first-time home buyers. And so in this guy's situation, he actually bought a new construction. And so the taxes, when you buy new construction, it takes less than a year usually for a new construction to go up. So those taxes are assessed on the land only. And if they're not explaining to you what's going to happen when it comes around to the year end and they're ready to reassess with a home on that lot now, you've got a brand new home, depending on the square footage, the price of the home, I mean, your taxes are probably going to be astronomical. The newer the home is, the higher the tax assessment value is going to be. So, you know, in his case, they didn't explain that to him. And so he was shocked to find out just how much his mortgage payment went up because escrow went up because taxes were reassessed on a home that didn't exist on the lot before.
Just seems to add on to the pile of reasons why a new construction build is not a great idea. And I'm talking brand new construction builds now. Obviously, a plain chunk of land is going to be taxed way less than having some monster new construction build 2,000, 3,000 square feet. And if you're not careful enough looking through the paperwork, a lot of people are going to get a rude awakening. And that's exactly what's happening right now. But one of the other reasons that people are getting price increases is insurance. We have a comment from one of you guys. As a homeowner in the US, I could tell you that the reason for rent going through the roof is insurance. Our mortgage went up almost $500 a month since we bought in 2020. Car insurance is raking us over the coals as well. I mean, it seems like all insurance in general is just terrible right now. We could go back to the woman in the last clip.
So our taxes had not been reassessed here in probably at least a decade. And I'm fortunate enough to live in a like small to mid-sized Midwestern town. So our taxes aren't super high anyway. I think mine went up from $858 a year to $935. But it was my homeowner's insurance that really got me this year. When I first bought this house, my homeowner's insurance was only around $800 a year. Last year it had gone up, and I mean, it's gradually been climbing, but by last year it was $1,800. So it had gone up $1,000 in 6 years. And now this year it was renewed again at $2,100. So I feel like insurance especially is going to be the thing that ends up getting us. Like I used to pay extra principal on my mortgage payment every month. And now I have stopped doing that, and I've started paying that extra to escrow because I don't want to get hit with another big shortfall.
Just all of these incremental increases making everything worse. One of the comments from this video, why did I think mortgage payments were a set price forever? Because if you start looking up these videos, especially if you are a renter looking at a single family home, trying to get out of the rental life, there are so many different people online saying that you're just throwing your money into a fire and your rent could go up every single year. Having a fixed rate mortgage will make you more stable. However, property taxes are going up all the time. Same thing with homeowners insurance. You could add in any of the maintenance or anything breaking in the house, but it is still variable. Maybe you get lucky and nothing ever breaks, but especially if you got a brand new construction build and you were getting taxed on just the plot of land and you didn't know the crazy increase you were going to have, not a year, a month. But we have another comment from one of you guys. Price gouging is happening. Mortgage went up $200. Taxes went up. Had to move back with family. This is definitely not a one-off issue. My house payment just went up another $300. I don't even want it anymore.
My wife and I were in the exact same position 3 to 4 months back. We had found out that our mortgage payment was going to go up roughly $300 a month. We fought it, we stopped it, and if you're someone who's in a similar position, here's what you can do to prevent this. So for those that don't know, home insurance has gone up drastically over the last 12 to 24 months. It's not just in these affected areas that are getting hit hard by storms. This is happening across the entire United States. Like my wife and I are in Maryland, and we found out that the reason why our mortgage payment was going to go up roughly $300 a month was because our home insurance premium was more than doubling. So we shopped our home insurance policy with over 100 different insurance companies and found a company who was able to insure us for less than what we paid for the previous year. As long as you have a fixed rate on your mortgage payment won't really change, but your escrows can change, like your home insurance or your property taxes. And staying on top of increases on your insurance premium is important because you can catch it in instances like this and shop it and try to get a better rate. And when it comes to your property taxes increasing, the state of Maryland has the homestead tax credit incentive, which helps limit the amount that the county and the state can increase your property taxes each year.
We can look at some of the comments here. Mortgage doesn't go up, it's home insurance and taxes, but might as well be the mortgage. You still have to pay it every single month. I bought my condo less than 2 years ago. When I bought it, the HOA was $250 and now it's $600 a month. I can't believe it's legal. Same here in Maryland as well. My mortgage went up by almost $500. My insurance and taxes went up by twice the amount we paid the previous year, man. And then another person talking about it, don't forget car insurance, always had full coverage, and it just keeps going up, and they say inflation. I don't know about you, but my car insurance keeps going up, and I have a 10-year-old paid off base model Civic. It's not like I have anything fancy or expensive, so it's just happening to everybody now. But I'm starting to see the popularity of adjustable rate mortgages come back, which was a huge issue back in the 2008 financial crisis. But with the high interest rates and how much people are paying, some are trying to look at other options. We could go a little bit more in depth.
Being able to afford a house just got even harder because the average rate on the 30-year fixed mortgage hit 7.48%. That means the monthly payment on a $400,000 home is roughly $420 per month than it was last year. Some banks recommend adjustable rate mortgages or ARMs as a cheaper option, but here's what they don't tell you. In a 5-year ARM, you can lock in an intro rate of around 6% for 5 years, but then the interest rate adjusts to the market rate after that. If interest rates are higher later on, your mortgage payment will go up. If they're lower, your rate adjusts downwards. So why would would people voluntarily choose an ARM? Well, it's cheaper to start. They're either hoping to refinance or they plan on selling the home within 5 years, in which case they'll never have to worry about any rate adjustments. The risk is if things don't go as planned. In the worst case scenario, if you're unable to sell the home, you get stuck with the larger payments, and if you can't afford those, you could lose your home. The ARM loan is a double-edged sword and something you must research before pursuing.
Here we could look at some of the comments. I wish a $400,000 payment was $2,100 a month. That's like $250,000. All you need to do to buy a house is do what I did, inherit money from my grandfather. ARM mortgages are a terrible idea, too risky for short-term gain. I don't know. I'm not a risky person in general. I get why some people are doing it just for the short-term relief, hopefully. But if things get worse in the future, it'll get way worse for some. I don't know how much worse it could get compared to this clip though.
Like, I didn't know that when I was building a home that I was just gonna have to pay taxes off the land, and then when the home is actually built, then you gotta pay taxes on the actual home and the land, which increased my mortgage by $3,000. I didn't know that. So now my mortgage is increased by $3,000 from what I'm currently paying. You know, and plus you still got all these other expenses and stuff like that. I don't knock buying a home. I think the goal should always still buy a home, but you should be prepared to know what's to come. Like I say, if they would have told me like, hey, your tax is going to be based off of this number instead of this number in a year, no, that wouldn't have changed my decision. I still would have moved forward. But if they would have told me that, I would have been prepared and not, you know, look in the mail and be like, bro, who this for? You feel me? Who is this for? I know y'all ain't trying to increase my mortgage.
Now, I'm hoping when he says it increased by $3,000, maybe it's yearly, because a $3,000 increase per month, he is acting way more calm than he should be in this video. To me, that's the difference between keeping the house and selling it and moving somewhere else. I don't know how you could just be prepared to pay an extra $36,000 a year. That's why I'm hoping it was just an extra $3,000 a year. I mean, the first clip was pretty close to that. What was it, $3,300 to a little bit over $5,000? That's still another one where many people would just have to sell the house, most likely at a loss now, and just lose an absolute ton of money. But we could look at another comment from one of you guys. My mortgage was $1,143 a month for years, and then it went up $350 a month in April just because of escrow and insurance. That's still cheap compared to some of these, yeah. But here we could take a look at more of the paperwork. So if you are in this situation, you know what to look out for.
If you're buying a brand new home, you have to understand this disclosure right here. Now, this is where people get in trouble and they get confused. This is that payment from here. This is your escrow account. There is no way your property tax and your insurance is going to be covered by $127 a month. It's not going to happen. But they're allowed to tell you your estimated total payment is the combination of those two. So you pay that for a year and a half. However, they disclose to you that your escrow needs to have $513 a month in it. But they say property taxes, some of them are included in this payment. And they say that homeowners insurance is included and the HOA is not included in there. So if you get this statement, please send it to anyone you know buying a new home, because they need to understand this. Their payment is going to be this plus this. And if they're not saving the difference between those two numbers, they're going to have a payment shock.
We have a comment from this video too. My escrow went up $3,000 a month this year. I wish I was exaggerating. Same amount as the last clip, and it was monthly, not yearly. That's more than most people's mortgages in total. And in this video, I've just been ignoring the cost of maintenance and upkeep for any of these homes. Whether it is an older home and maybe you need to start replacing pipes or the heater or anything like that. And then new construction homes are so poorly built that you do need to start replacing stuff right away. And then that starts adding up. We have a comment from one of you guys. I tried so hard to make all the right decisions. I saved up for a large down payment, made sure the mortgage was safely below 30% of my income, found the best inspector in my area, and still got screwed. Within 6 months, we had $70,000 in unexpected repairs. Pipes broke, furnace blew, water heater needed replacing, roof leaked, etc. The inspection missed tons of things that would have kept me from purchasing had I known. In 1 year, we went from having 6 figures in the bank to now being in debt for $40,000. And every time I start gaining ground, something else breaks. So imagine you had all these problems with escrow and the price increases along with these repairs. It would honestly be the worst financial mistake you made in your life. And whenever I make these kinds of videos, There's a whole bunch of people that get mad saying that I'm just throwing money into a fire, when my goal overall is to still own a home. I guess you could say I'm in the very early stages of looking for a home right now, even though things are wildly overpriced here and I most likely have to move somewhere cheaper. But all of these horror stories in the comments and videos don't make a great case for many people, and I kind of understand where some come from when they just don't feel like owning a home ever. Here we have a clip with a very different reason of the mortgage increase, but I mean, with everybody moving to different states over the past few years, this honestly could have happened to you too.
My mortgage went from being $1,500 to over $4,200, and that's because I made the decision to move from Michigan to California to have better weather. And it's just so crazy to me because I'm not even in a house in California. I'm only in a condo. I did some calculations. If I was to buy a single family house that's even similar, like remotely similar to what my house in Michigan was, then my monthly mortgage would be over $10,000. And to get a house that's like kind of small, 3 bedrooms, maybe $1,500, my monthly mortgage would be over $7,000 in California. It's just wild to think how much more housing costs here, because in Michigan, it for $250,000, you can get yourself a really decent house. Like here, you can't even get something at a trailer park for that much in Southern California.
I've never been to California. I bet the weather is amazing, but it must just do something to some people because of how much money it is to live there. And if you are super wealthy, I mean millions and millions of dollars you don't know what to do with, then I understand moving and living there. I bet it'd be super nice. Going from a house that was $1,500 a month to $4,200 and you have a condo, that's just not for me, honestly. And then you have any of those problems where HOA increases or insurance, adding on top of that ridiculous monthly bill. I don't know how too many people survive there.
Just got notification that my mortgage is going up for 2025. I knew that this was going to be happening, but I had been dreading the day that it does happen. And when my husband walked in tonight with a huge stack of mail, I just knew that this was sitting in there. Basically, last year, our homeowners insurance non-renewed us, travelers. Hate you. They non-renewed us. They said that we needed a new roof. They were using satellite photos to look at our roof. Nothing wrong with our roof, according to the home inspector that inspected our home, that we had come out and re-inspect our roof. Or the 3 roofing contractors that we called to get their professional opinion. Travelers Insurance basically said, nah, shove it. You need a new roof and we're dropping you as customers. Unfortunately, that when they do that, it puts a bad rap on your name or whatever, like you're in probation almost. So we only have one singular homeowners insurance company right now that is willing to insure us, and it was to the tune of about $2,000 more than what we were paying, which is heartbreaking. But on a positive, we're allowed to have a trampoline without any additional cost incurred, which I guess is a win-win, right? And then our taxes went up in October. Coincidentally, just a few months after the community struck down a multi-million-dollar budget increase to the taxes. Community struck it down for a number of reasons, but primarily because every year for the past 4 years, taxes have increased in the town that I live in. I do live in New Hampshire. We are one of the highest tax states out there, though I'm sure someone's going to tell me that their taxes are higher. We don't have income tax or sales tax, so that has to be recuperated through the tax of properties.
So this is one of the stories that if you watch Michael Bordenaro, he has many of his viewers email him or write him with the same issues when it comes to insurance. Ridiculous demands like they need a new roof, even though they had home inspectors and a whole bunch of other professionals saying, no, it's completely fine. And just because of that, they could drop them and put them in some sort of probation where I guarantee the only other company that'll insure them will have insane pricing to go along with it. So it's a lose-lose situation. You're going to spend a ton of money on a brand new roof that you don't really need, or you're going to get dropped and have terrible homeowner insurance that costs way more than it should, and there's nothing you could really do. You just kind of have to accept it. So even though a fixed rate mortgage sounds better than a yearly increase if you are a renter, it's a little bit misleading because you're going to constantly pay more money just to be able to own your house in hopefully 30 years. But if you don't pay property tax even after that, they could still take your house. And this entire situation is just a mess. But that's all I got for you guys today. Let me know what you guys think in the comments down below. YouTube thinks you'll like this video popping up on screen right now, but hopefully you guys enjoyed this video. If you did, please leave a like, and I'll talk to you guys later.